Most people spend their entire lives working with money but never understand how it actually works. Not the textbook definition, the real system. The invisible architecture that decides whether you'll struggle or sleep peacefully at night. Here's what nobody tells you. The people who benefit most from you not knowing are the ones writing the rules. In the next few minutes, I'm going to show you exactly how the system works. The stuff they don't teach in school, the mechanics your bank won't explain, and the psychological traps designed to keep you stuck. This isn't about crypto or get-rich-quick schemes. This is about the fundamental architecture of money itself. Once you see it, you can't unsee it. What money actually is. What is money? Most people say it's a medium of exchange. Technically true, but incomplete. Money is trust, a collective agreement that these numbers on a screen have value. Imagine a classroom where the teacher declares gold stars are now currency. Everyone agrees. Suddenly those stars have value. But only because everyone believes they do. The moment the class stops believing, just stickers again. That's fiat currency. The dollar has no intrinsic worth. Its value depends entirely on public confidence. Your paycheck isn't wealth, it's a claim on wealth, a promise. Here's where it gets interesting. Centuries ago, a small group realized that if they could control that trust, they could control everything. They built banking systems to make money seem mystical, something you couldn't possibly understand. Most people never question it, they just use it. And if they don't have enough, they blame themselves. That's not an accident. The fractional reserve devil. Let's say you deposit $10,000 in a bank. You think it's sitting safely in a vault. It's not. The bank keeps $1,000 and loans out $9,000 to someone else. This is fractional reserve banking. Banks only hold a fraction of deposits in reserve. Surprisingly, in the USA, the fractional reserve rate is currently 0%. Here's the part that breaks your brain even more. The bank lends out money that doesn't exist yet. They create it digitally by making loans. Every dollar beyond physical currency is debt someone owes to a bank. Your salary, the money in your account, a huge portion only exists because someone somewhere is paying interest on a loan. The system requires perpetual debt to grow. Why? Because every loan has interest attached. Think of it this way. A bank creates $1 million in loans with 5% interest. That's $1 million in the economy. But it's also created a requirement for $1,050,000 to exist to pay it back. Where does that extra $50,000 come from? More loans, more debt. It's like a pizza shop that only accepts pizza as payment. The system feeds on itself. The average American household carries over $110,000 in debt. The US national debt passed $37 trillion in 2025. Most people think, I'm just bad with money. But you're not bad with money. You're playing a game where the rules were written by people who win when you lose. The psychology that keeps you trapped. Meet Adam. He makes $50,000 a year. Decent apartment, okay car. But every day he sees friends posting vacations, new iPhones, designer clothes. He doesn't feel poor, but he doesn't feel like he's made it either. This is the status effect. You weren't born wanting these things with this intensity. You were trained through ads, social media, the people around you. And here's the genius part. The system lets you have them before you can afford them. That's debt. Time travel for consumption. You get to feel rich today and pay for it for the next 30 years. But while you're paying, you can't take risks. You can't quit the job you hate. You can't start a business. You're trapped. Not in chains, but in comfort. The system relies on this predictability. So they create financial products designed to extract fees. Overdraft fees, $2 short. That'll be $35. Credit card rates, 18 to 30% APR, but they only show you the low monthly payment. Minimum payments, designed to keep you paying interest forever. $5,000 at 20% APR with minimum payments, over 20 years to pay off, more than $10,000 in interest alone. It's not complicated by accident, it's complicated on purpose. When you don't understand the system, you blame yourself. And when you blame yourself, you don't get angry at the system. How the wealthy flip the script. People who understand money don't use debt the way you do. They use it as a lever. Scenario A. You borrow $50,000 for a new car. It loses 20% driving off the lot. $10,000 gone instantly. Over 5 years, you're paying interest on something actively losing value. Scenario B. Someone else borrows $50,000 as a down payment on a $250,000 rental property. Rent covers the mortgage, the property appreciates, and the interest, tax deductible. When you pay interest, it's with after-tax dollars. You already paid the government 25%. When they pay interest on investment property, tax deductible. Same $1,000, but they save $250 while you get nothing. Here's the real kicker. Leverage multiplies returns. Put down $50,000, borrow $200,000 to buy a $250,000 property. If it appreciates 10%, it's now worth $275,000. That's a $25,000 profit on your $50,000 investment, a 50% return. You use debt as a weight that drags you down. They use it to multiply wealth. The compound interest weapon. Einstein called compound interest the eighth wonder of the world. He was right, but there's a catch nobody mentions. It only works if you have money to invest in the first place. Invest $10,000 at 10% annual return. After 40 years, over $450,000. You put in 10 grand and walked away with nearly $500,000, but most people don't have $10,000 to invest until they're 40 or 50. Why? They're too busy paying off debt, which compounds against them at even higher rates. The dark side, $10,000 in credit card debt at 18% interest with minimum payments. After 10 years, you've paid over $24,000 total, $14,000 in interest alone. And here's what makes it brutally unfair. Wealthy people often start with generational wealth. Parents give that first $10,000, or co-sign the first property so they start at 25 instead of 45, or pay for college so they don't start $100,000 in the hole. By 30, their investments are growing. Their rental property pays them. Their business is profitable. Meanwhile, you're just getting ahead in your 50s, right as you're supposed to retire. 20 extra years of compound growth isn't a small advantage. It's a generational head start that's almost impossible to overcome. The math was never meant to be in your favor. The trap of normal. Here's what really messes with your head. The system doesn't just trap you financially, it traps you psychologically. Adam hates his job, his boss micromanages, the work is soul-crushing. Every Sunday night, that pit in his stomach thinking about Monday, he dreams of quitting, starting something meaningful. But he can't. He needs $3,000 minimum to survive. Mortgage, car payment, student loans, credit cards. He's not irresponsible. He's trapped because the system made normal unaffordable without debt. What it takes to live a basic middle-class life. College, $30,000 to $100,000 plus in debt. House, $200,000 to $400,000 plus in debt. Car, $30,000 to $50,000 in debt. Medical emergency, $10,000 to $50,000 plus in debt. Things previous generations could afford with one income and a high school diploma now require 2 incomes, college degrees, and decades of debt. While you're trapped in debt, you're predictable. You won't protest. You won't strike. You won't risk your income. You'll show up, do the work, and stay quiet, because you have bills to pay. You're not controlled by force. You're controlled by comfort, or more accurately, by the threat of losing that comfort. People with debt don't revolt. They comply. They don't take risks. They play it safe. If you're still watching, drop a comment. I see it now. That's the first step, seeing the game for what it is. Hit subscribe if this is blowing your mind. We break down systems like this every week. Now let me tell you what you can actually do. Understanding the system doesn't free you from it, but it does something more important. It lets you stop blaming yourself, and that changes everything. Once you see the game, you can choose differently. You don't need to signal wealth you don't have. You don't need debt for things that lose value. You don't need to play by rules designed to keep you losing. Wealth isn't about how much you earn. It's about how you position what you have. Person A makes $50,000, spends $52,000, always stressed, always one emergency from disaster. Person B makes $50,000, spends $35,000, invests $15,000 per year. In 20 years, over $850,000. You probably won't become a billionaire. The system is too rigged. But you could build a life where money serves you instead of the other way around, where you don't panic at expenses, where you can take risks, where you can say no without fear. The system wants you to feel powerless. But now you know better. Don't just nod along and scroll away. Start small. Question every purchase. Avoid debt for things that lose value. Build even a $1,000 emergency fund. Options are freedom. You won't fix everything overnight, but every small decision different from what the system wants, that's a win. The system profits when you feel powerless, but now you know better. So what are you going to do with that knowledge? If this opened your eyes, smash that like button and subscribe. Drop a comment. What shocked you most? The more you know, the better your chances. See you in the next one.